Do you want to be ahead of the game for the latest in arts, music, cuisine, and entertainment across the Middle East's most dynamic capital cities? Al Monitor is proud to launch our City Pulse newsletters, focused exclusively on local news, starting in Riyadh, Dubai, Istanbul, and Doha. Each week, our on-the-ground writers in these cities cover the latest cultural happenings and trends, so you have everything you need to know for the best local experiences. To subscribe for free, go to almonitor.com, that's al-monitor.com, and sign up on our newsletter page.
Welcome back to the Al Monitor Brief. I'm Adam Lucente. U.S. President Donald Trump placed reciprocal tariffs on a number of countries on Friday, fulfilling his vow to take action against those running a trade deficit with the United States. The reciprocal tariffs for Middle East and North African countries are as follows: Algeria, 30%, Iraq, 35%, Israel, 15%, Jordan, 15%, Libya, 30%, Syria, 41%, Tunisia, 25%, Turkey, 15%. Others in the region and throughout the world remain subject to a 10% baseline tariff. In this episode, Al Monitor's chief business correspondent, Jack Dutton, takes us through the many ways in which the tariffs will affect the region. We discuss how the Gulf may actually benefit from these tariffs, what leverage regional states may have as they potentially negotiate new trade deals with Trump, who should be most concerned about the president's threat to impose additional levies over trade with Russia, and how the market for oil, which is exempt from the measures, will nonetheless be impacted. Hope you enjoy. Jack, welcome back to the Al Monitor Brief.
Great to be back on, Adam.
Jack, you wrote in your analysis that Gulf countries could be the winners as the tariffs come into effect. Is it that they'll be relatively less affected by the tariffs, or could they actually benefit from this Trump administration policy?
I mean, the Gulf countries are actually running trade surpluses with the US, unlike a lot of the other countries which are facing higher tariffs who are running trade deficits. So as a result, the Gulf countries have only 10% tariff rates, which means that they're going to be less affected than some of the other countries in the region, such as Algeria or Iraq, who will face 30% tariffs. As a result, they can really increase their market share because they'll have more capital available and they'll have more opportunities for their businesses to export to the US at cheap costs. So there's a way they can definitely increase their market share. And also they have generally bigger government budgets than some of the countries which are facing higher levies. For instance, the UAE and Saudi Arabia have very deep pockets and they can easily step up their exports if they want to at quite short notice. One thing they might need to watch out for, though, is Donald Trump has repeatedly threatened, but so far not acted too much on applying 100% secondary tariffs on any country trading with Russia because of the war in Ukraine. The only country he's done that in a very meaningful way is India. So the UAE has a track record of welcoming the capital from oligarchs from both Russia and Ukraine. And they really need to watch that they're not subject to any secondary tariffs to be able to really exploit the lower general tariff rate from the US.
And Jack, which countries in the Middle East and North Africa receiving reciprocal tariffs might be hurt the most?
Okay, so that's quite a complicated question because there's a lot of exemptions you're seeing. So almost in theory, all goods should be tariffs, but what we're actually seeing is quite an ad hoc and quite random section of exemptions. Though the Trump administration says this is all strategic and it's not meant to benefit one industry. So, for instance, we see oil and other energy sources are largely exempt from tariffs, and other industries like electronics and machinery, pharmaceuticals, toiletries, metals, precious metals, chemical products are partially or totally exempt from tariffs. And Trump has promised there'll be more sectoral tariffs coming, which will include some of these previously exempt items like semiconductors and pharmaceutical products. But as we know, the Middle East and North Africa is a very energy-rich region. And even when you look at some of the countries in the region which are most acutely affected by the levies, like Iraq and Algeria, they're not going to be paying those same levies on the amount of oil, for instance, they are shipping to the United States. So in May, Iraq became the top OPEC crude oil supplier to the US, exporting nearly 7 million barrels. So those are not going to be subject to levies, but you're going to see the countries in the region which are less major, are not as much major energy exporters, such as Tunisia, which faces quite a hefty tariff of 25%, as being hit more and hurt more. Because, for instance, for the most recent data from the Observatory of Economic Complexity, shows that the top exports from Tunisia to the US in 2023 were low voltage protection equipment, about $27 million, and non-knit women's suits, $25 million, and insulated wire. So we're going to see those sorts of industries more impacted, and also kind of the industrial sector in these countries. So whether that's textiles in Egypt, which are quite heavily dependent on imports, which will be at less competitive rates as a result of these tariffs and reciprocal tariffs. Those are the industries which are going to feel the pain more than the kind of main industries the region is known for in terms of exporting to the US. So oil and gas, that's not going to be felt. And also the US is becoming much more self-sufficient now on oil and gas following the shale revolution and the kind of new oil discoveries, especially in the South and Texas, and Trump's policy of drill, baby, drill, as in exploring for as much fossil fuels as possible, kind of dialing back his predecessor Joe Biden's more climate-friendly policies.
And what are some of the indirect effects these tariffs might have on the region?
We can look at the macro effects. We've seen the markets really kind of lose their value, and you've seen the price of energy really drop. So if you look in the last 6 months, if you think about way back to April the 2nd, when Donald Trump announced those tariffs, we've seen over the last 6 months, Brent crude, which is the global benchmark price for oil, dropped by about 8%. So it's definitely like hitting the energy markets, and the likes of Saudi Arabia and Iraq, as I mentioned, Iran are major oil exporters. So with the prices lower, it means that the governments will be able to make less money from the revenues from oil. So we're seeing indirect impacts there through the markets. But also we're seeing a recalibration of global trade as well. I mentioned India as an example earlier. A couple of days ago, Donald Trump announced a 25% tariff on goods from India, the world's fifth largest economy, starting today. And his reason, as I kind of touched on earlier, was because India is, apart from China, is Russia's largest buyer of energy at a time when the West and the US included have sanctioned Russia and Russian oil over its involvement in the war in Ukraine. So India faces these 25% levies now to export any item to the US, apart from energy, of course, but it's not a major energy exporter to the US. So according to OEC data, the main exports from India to the United States are packaged medicaments and pharmaceuticals, some of which may be exempt, diamonds, about 7.6 billion, broadcasting equipment, over 6 billion, and jewelry, nearly 3 billion. And given the high tariffs on these exports to the US, many of these shipments may be redirected to other countries. Some of them may be in the Middle East, because if you look at the biggest buyers of Russian diamonds, for example, the United Arab Emirates is the fourth biggest, and Israel is the fifth. So you might see Indian diamond companies choose to export more of these diamonds to countries instead of the United States to avoid having to pay the high tariffs, which will increase trade between India and Israel and the United Arab Emirates. So we could see some countries in the region really benefit from the indirect effects. But of course, it can go the other way too, where some may have to export to countries which have strong trade relationships with the US and Europe, for example. So Morocco is quite fortunate. It's got a 10% levy, so it's quite low, but it also has a trade relationship with both the United States and the EU, trade deal, sorry, and they might choose that country over another country in North Africa like Libya who don't have the same relationship with these two major markets. So we'll see some indirect effects for sure, but it's time will tell as into how big it is.
Don't go anywhere. We'll be back with Jack Dutton after this short break.
Today's transformation of the Middle East is at the center of global geopolitics. Whether you're an analyst, diplomat, executive, or academic, you need the best reporting and analysis to understand what's really happening on the ground and what it means for the world. Al Monitor is the award-winning independent leader in Middle East news. From Riyadh to Beirut, Abu Dhabi to Doha, and Baghdad to Tehran, our team of over 100 expert journalists report daily on the top stories driving the regional trends. Download our mobile app and subscribe to Al Monitor to follow what leaders and decision makers are reading every day. Go to almonitor.com, that's AL-MONITOR.com, and use promo code POD25, POD25 for a discount.
Okay, we're back. Jack, what leverage do the Middle East and North African countries who are subjected to these reciprocal tariffs, what leverage do they have with the U.S. in terms of negotiating new agreements and perhaps a reduction?
Perhaps this is a bit cynical of me, Adam, but it's quite interesting to see when you look at the new countries, the countries who are now faced adjusted tariffs, and the highest tariffs tend to not be as much of an asset in terms of having deep political and economic ties to the US in the same way. So you look at the likes of Algeria, Iraq, Libya, Tunisia, Jordan. When you compare them to the Gulf countries or Egypt, which have 10%, or Israel with 15%, they're not quite as significant to the US relationship as the countries which have the lower tariffs. But it is interesting to look at this really and really kind of think about what leverage they have, because the way I look at it, there's two dimensions really. There's the political dimension and the economic dimension. So politically, a lot of the Gulf states and countries in the region have a strong role in mediating conflict, whether that's the war in Gaza, which you've seen Qatar really play a strong role in, for example, or whether the 12-day conflict between Israel and Iran last month. And it's in the US interest for there to be some stability, but also Iran not being able to proliferate nuclear weapons. So it's quite important leverage, political leverage, some of the Gulf countries and other countries in the region have, especially Qatar and Saudi Arabia, who Saudi Arabia obviously has been quite keen, and Qatar, in investing in Syria as well and helping that country's economic recovery. So there's the political leverage. And from an economic standpoint, there's also a lot of leverage when it comes to energy. As I mentioned earlier, Algeria, Libya, Iraq, they've been hit hard with levies, but those levies are not affecting oil and gas. But as I said, the US is importing far less energy now due to the shale revolution and Trump's kind of fossil fuel friendly policies, let's say. Also, you have huge investments from the Gulf into the US when Trump, on his first foreign visit since returning to office in January for his second term, he went and toured the Gulf, which shows how important the region is to him, securing more than $2 trillion in investment commitments, including in fields including tech, AI, data centers, clean energy, and oil and gas. And for instance, you've seen the likes of the UAE heavily invest in AI and data centers in the US. AI investment company MGX has even invested heavily in the stablecoin affiliated with the Trump organization and family, which has actually made his family millions. And you have a lot of Middle Eastern investment in Affinity Partners, which is Donald Trump's son-in-law, Jared Kushner's fund. And then other examples, I think, is the huge partnership between Microsoft and the region's biggest AI company, G42. So there's a lot of economic clout and leverage there from the Middle East as well.
Jack, thanks a lot for your time, and we look forward to more of your reporting on this issue.
Thanks. It's been great to be on.
Thanks for listening to the Al Monitor Brief. Be sure to follow Al Monitor for more on the stories impacting the Middle East. Until next time, I'm Adam Lucente.